Yo, what's up guys, Aiden here. So today in this video, I'd like to share with you how I lost $200 trading stocks. A little bit annoyed with this one because my thesis was correct, but there are some really good lessons in terms of how I traded and how I want to adapt moving forward. The stock is currently pushing to new highs, so let's jump into some charts and I'll show you what's going on. All right, cool. So the one and only ticker I would like to go over today is AGFY. Now, if we start from the daily chart, well, we can see instantly that it does like a reverse split. Now, when this ticker popped up on my scan today, it was immediately of interest to me simply because I recognize the ticker. And if I recognize the ticker, it's likely that other people will, and so therefore there may be an opportunity there. So when it popped up, instantly, sort of the first thing I did was I checked the news actually, and what I recognise is whilst it did have news, some sort of like I think it's like is it biotech, some sort of biotech news I think, but even more interestingly or importantly to me was that this morning there was a form effect, which means that the company is now in a position to do some sort of dilution. So when I saw that, I jumped to the daily chart, and it was this day here. You can see the days with the bigger volume, this day here and this day here, that were of interest to me. Previously, the volume has been quite low, so I want to know how it's acted on days where it's had significant volume, which is these 2 days here. And we can see that what it's done on these days is had a significant gap up, small morning spike, and then dumped all day. Now, what that meant to me was that, firstly, generally, I'm probably not going to trade this once the market opens. I might dig deeper into the filings and see just exactly how much sort of dilution is there, etc., etc. But generally, this isn't something I'm going to touch when the market's open. However, this potentially is going to offer me an opportunity pre-market, because I can see that they're trying to dilute the stock and they like to pump it high for when the market opens, so the liquidity is there to dump into. So that to me means that, like I say, they're going to try and increase the price during pre-market hours. So I thought this could be a good pre-market trade. So if we jump to the intraday chart here, so we can see so initially I thought it was going to follow this trend here, okay, this down here. And so when it sort of like under over 5, and so I took a piece at 5 and then was risking this low here and then just cut it immediately when it broke down, and then sort of re-evaluated and can see that it was following this trend. Okay, so I took a piece here when it broke this trend, risking this low, and then cut it immediately when it broke again, and found myself down $200 and felt a little bit sort of exhausted with the whole situation really, and started to feel like, okay, they're just dumping pre-market instead this time. Then, obviously it sort of broke lower of day, but not by much, and then double bottomed or triple bottomed here, and then pushed to new highs. Now I missed this whole move. Again, I took a loss here, I cut here, and I took a loss here. And that has happened to me quite a lot, really. So I'm not going to feel sorry for myself about it. I just want to learn and adapt and see, because my thesis is correct. It's just something that needs improving in relation to how I'm trading it. So the fact that I can identify it's moving in this sort of, I guess, channel is good, and I'm seeing this a lot with stocks at the minute. What they're doing is they're moving in a downward, sort of following a trend line, or they're in a channel, and then they break the channel, move horizontal, and then push to new highs. It's really, really common pattern at the moment. But this sort of risking off this low when it breaks the channel isn't sort of working for me. I guess it has a little bit, but I've been shaken out quite a lot, and it is because it breaks this low. So in the future, what I'm going to do is, okay, recognize that it has had a nice morning spike, and then it has been in a downward channel or / following a downward trend. Then it's broke the trend, so it's cool recognizing that. But then what I want to see is how it reacts to this low, and does it form some sort of base, which it does here perfectly. And if it does, then I won't risk getting shaken out. I can risk because the problem is if I take it here and I cut here, that's fine. You can do that, and I did do that. But you still have sort of, if it does break that only just, you still have to cut here because you don't know how far that's going to go down, and that's what's sort of catching me out at the moment. So like I say, moving forward, what I am going to do is just see how it reacts to that low, and if it does break it, does it form a base after that? And again, if I do sort of because this low can hold, do you know what I mean? I've seen it hold, or I've seen it sort of break that and not look back. So if I do take a piece here and risk off this low, it just has to be a really, really small piece that I am willing to cut and just keep myself alert and awake, and not write the trade off, and not be burnt out. Just accept that, okay, I've cut it there. Now, is it going to form a base? Is it going to give me good risk reward and an opportunity to get back in? So this was like, what's this? I don't know. What's let's do some maths quickly. So I saw this double bottom here and was looking to get in at like 427. And I just didn't do it because I was just so burnt out. So if you do, what's the high here? The high here is 6.82 minus 4.27 equals by 4.27. Okay, so it's a nice 60% move there I just missed out on, and I was sort of expecting it to sort of retest these highs. That was my thesis, given that I know it likes to have these big gap ups so it can dump all day. But yeah, that's it. I guess, yeah, just can live and learn, and just see how the rest of the day pans out. Cool. Thanks for watching, guys. Cheers. Alright guys, so as a happy coincidence, a ticker did set up this afternoon which would allow me to implement the lessons I learned from this morning, and that ticker was SPPL. So this is the daily chart, and we can see here that it had this huge day one move, 400 million shares traded. After hours it was up like 400%, and this morning pre-market had a spike up to 250. So huge move starting its run from 30 cents. A lot of eyes on this one. So if we jump to the intraday, we can see this is the move yesterday, and this is the spike pre-market, and then a fade since, had a nice bounce, and then just washed out all day. Now, this was interesting to me because I recognized that this particular stock was doing this. It was moving in, it was following that trend line. So as I said this morning, I want to get in that. That is of interest to me once it's broken. Not only that, it's down. It was, you know, a lot of eyes on it from yesterday. It is a special sort of stock. It's down now from 250, and it is touching that psychological round number of 1. Okay, so and it's breaking that trend line. So all these factors is what creates my thesis and helps to build conviction. Now, I sort of broke my thesis a little bit. I got a little bit of FOMO because here the low of the day was 107, and it sort of tried to break it and it couldn't. Had a quick bounce, and I thought, okay, this could be the bottom. So I bought here 109, I think, expecting this trend break, and it just washed out, and so I just cut straight away. I didn't panic. I still had this trend line drawn on, and I wanted to see how the stock reacted to it. When it broke it here quite strongly, what I did well is I didn't chase it. I waited for it to pull back, and I got in at 105, and I was going to risk the low of day at 102. Now, if it had broke 102, I would have cut. I know there's $1 there, but there's also 99, could hold 90. I just cut. I'm risking off this low. And if it had broke this low, I was going to look to see how the stock reacted. If it broke that low only by a little bit and then started basing, then I'd have a clear risk to risk off. So I'm created for this scenario a lot of if-then sort of cases that I can act accordingly. So I take a small starter. I didn't in this case because it popped too quick. I can take a small starter in case the stock just rips. I have to risk off this low. If it pulls back, I can enter risking off this low. If it breaks this low, I have to cut and then see if a base forms, and I can act accordingly by risking off that. If that doesn't work and that low breaks, then my thesis is therefore invalid, unless it starts basing a bit lower, I suppose. But yeah, I think in that case, yeah, my thesis probably would be invalid, I guess. So, like I say, I got in at 105 and I was hoping it could retest this 130 area, but my plan was to sell a significant piece into red green because I'm trading a little bit scared there and trading a little bit off my P&L because I was down like 280 on the day after taking a loss here, and I kind of got a little bit caught up in that, which isn't great. We should take each trade individually, but it is what it is. I don't mind taking off a piece here, just because although it is a strong move, it is only a day one move, and that is red green, and it is, this could quite easily fail red green and come back and retest one and hold one, and perhaps will break one or set up for a $1 hold later on down the line. So I don't mind taking a piece off here. That my plan was to sell the rest at the 130s, but when it started breaking out and stuttering, I got a bit scared and sold the rest, so that's not cool. But nevertheless, I made like 170 on this trade, and my thesis was great, and I'm pretty happy overall with how I traded it. I am now finishing the day down 110, which isn't ideal, but feels quite good having made back a significant part of my loss. So yeah, really cool. Happy that I got to, like I say, implement what I learned, and see you on the next one. Cheers.